everyone, and welcome. Let's start with a simple idea. What if everything got cheaper? Your phone, your food, your car. I mean, it sounds like an absolute dream, doesn't it? But what if I told you that dream could actually be a nightmare in disguise? Today, we're diving into the hidden danger of deflation. Seriously, think about it for a second. Your paycheck suddenly stretches further. That new TV you've been wanting is now 10% off. Your grocery bill actually goes down. On a personal level, this feels like a total win. But when we zoom out to the entire economy, is it really that simple? All right, so let's get the official definition on the table. Deflation is a fall in the general price level of pretty much everything. Here in the US, we often track this with something called the Consumer Price Index, or CPI. It's basically a big shopping basket of typical stuff people buy. When the price of that whole basket goes down, that's deflation. Put simply, it's just negative inflation. So to really get our heads around this, here's what we're going to cover. First, we'll look at why falling prices seem like such a dream. Then we'll break down the huge difference between good and bad deflation. After that, we'll explore the dreaded downward spiral, check out a real-world case with Japan's lost decades, and finally, we'll talk about how you can think about deflation-proofing your own world. Okay, so first up, let's lean into that alluring promise. Why does deflation feel so good right out of the gate? Well, in the beginning, the impact on your wallet is, well, it's awesome. It's a direct boost to your purchasing power. Every single dollar you have simply buys more stuff than it did yesterday. For a little while, as prices fall but your income stays put, it really can feel like an economic paradise. But this is where the story gets a whole lot more complicated, because it turns out not all deflation is created equal. There are two very, very different kinds, and honestly, understanding the difference between them is everything. So the key thing to understand is the cause. Good deflation is the healthy kind. It comes from things like technological breakthroughs that make it cheaper to produce stuff. Think about how the price of computers or data storage has just plummeted over the decades. This gives us lower prices, sure, but it's happening while the economy is actually growing. Now, bad deflation, that's caused by a collapse in demand. People just stop buying things. And yeah, that also leads to lower prices, but it's a symptom of a sick, shrinking economy. And these two graphs right here tell the whole story. On the left, you've got good deflation. The supply curve shifts to the right, we're getting more productive, so prices fall. But look, the economy actually gets bigger. Now on the right, you see bad deflation. The demand curve shifts left. People have slammed the brakes on spending. Prices fall again, but this time the whole economy shrinks with it. That, my friends, is a recession. And it's this bad, demand-driven deflation that really gives economists nightmares, because it doesn't just stop at falling prices. It can kick off this dangerous, self-feeding cycle that's incredibly hard to break. And make no mistake, the stakes here are astronomically high. This isn't just some theoretical classroom problem. As Investopedia points out, a long, stubborn stretch of deflation is linked to some of the darkest chapters in economic history, including the Great Depression. So how does this spiral even work? Well, it all starts with a very simple, very human calculation. When you see prices falling, you think, hey, why buy this car today when it'll be $1,000 cheaper next month? So you wait. But the problem is, when everyone waits, demand just evaporates. Company revenues plunge. So what do? They have to cut jobs and slash pay, which of course means people have even less money and confidence to spend, and the cycle just keeps feeding on itself, spiraling downward. And if you thought that downward spiral was the only problem, think again. Deflation has this other, really sneaky way of poisoning the financial system. It makes the real burden of debt skyrocket. Just think about your mortgage for a second. That monthly payment is a fixed number, right? It doesn't change. But in a deflationary world, your wages might be falling and the value of everything else is dropping. All of a sudden, that fixed payment becomes a much, much heavier chunk of your shrinking income. This leaves you with less cash to spend on other things, which crushes demand even more. And when this happens to millions of people, you see a wave of defaults and bankruptcies that can threaten the entire financial system. Now, this isn't just theory. To see what a real drawn-out fight with deflation looks like, we only need to look at the recent history of Japan. See, back in the late 1980s, Japan's economy was on fire. It was a massive asset bubble. Real estate and stock prices were just through the roof. But when that bubble inevitably burst in the early 90s, the economy plunged into a downturn that would be defined by one relentless enemy: deflation. This timeline really puts their struggle into perspective.
After the bubble burst, Japan entered what became known as its lost decade, a period of stagnation that actually dragged on for almost 2 decades. A full-on war against deflation wasn't really declared until 2012, with the launch of a super aggressive policy called Abenomics. And the consequences were huge. A deflationary mindset took over the whole country. People just kept putting off big purchases, always expecting prices to be lower tomorrow. Wages didn't budge for years, and the central bank was basically powerless. Their main weapon, cutting interest rates, was useless because rates were already at zero. All of this, combined with an aging population that tended to save more than it spent, just locked the economy in this low-growth trap.
Okay, so with all these scary scenarios, what can you actually do about it? How can regular investors and savers get ready for a world where prices might be falling instead of rising? Well, the good news is that just like there are playbooks for inflationary times, there are also well-known strategies to prepare for deflation. The whole key is just understanding which types of assets tend to do well when the economic winds are blowing in that direction. In a deflationary world, safety is king. Investors tend to run towards defensive stocks. Think companies that sell things people have to buy no matter what, like toothpaste and food. They also love high-quality government bonds. And here's the weird part. Cash becomes a fantastic asset because its spending power is literally increasing every day. This is the complete opposite of an inflationary period, where you'd want to be in growth stocks and real assets like gold or property.
Look, at the end of the day, trying to perfectly predict what the economy is going to do next is a fool's game. That's why the best advice, as this quote from Investopedia points out, is almost always diversification. Having a solid mix of assets that do well in different situations is really the most reliable way to protect yourself long-term. So the big takeaway here really is this. You don't need to be a professional economist, but just having a basic handle on the economic weather, knowing if the winds are inflationary or deflationary, can help you build a much stronger financial ship to navigate whatever comes your way.
And that leaves us with a really fascinating question to think about for the future. Remember that good deflation we talked about, the kind driven by technology? Well, as powerful forces like AI keep making goods and services cheaper and cheaper to produce, could we be heading into an era where we actually have to learn how to manage a healthy growth-driven deflation? It's a huge debate that economists are having right now. In the end, the whole paradox of deflation is a powerful lesson. That simple, wonderful dream of everything getting cheaper hides a really complex and potentially dangerous reality. It's just a great reminder that when it comes to the economy, things are rarely as simple as they first appear. And a healthy system is always about finding the right balance. Thanks for joining me.